Hello everybody, my name is Mark, and in this video I am going to go over my gold investment in GDX. GDX is an ETF on the gold mining companies, and that's my hedge in case something goes screwball in the economy so that I make a little bit of profit. So I did some things over the last few days, so let me bring up the transactions here. And so here's what I did. So July the 7th, 2017, I bought back my covered call, which I sold. And let's see if I can find that where I sold that call here. So let's bring up GDX. I want to show you the money that I made on that. So we'll go back to June. I think it was in June that I did that. Nope, maybe it was earlier. Maybe it was in May. Let's go to May. Nope, I guess it would have been in April. So let's go to April and bring up April. Okay, here we go. Right here on April the 25th, I sold GDX call option, $28 strike price, and here's the money that I took in, $76.28. And then today, or not today, this would have been July the 7th, a few days ago. Today is July the 13th, 2017. I bought it back, and I bought to close it. I closed out that covered call option, and so I paid in $38.72. I took in $76.28, so $76.28 minus $38.72 is a little under $40. It's about $38 that I made. So I can subtract that off of the money that I spent on the put option that I bought. And this here is the put option that I bought. Once again, I use the option caller strategy to hedge myself. It's the safest way to invest your money. It gives you all of the upside risk and eliminates almost completely any of the risks that you would take. So you just buy 100 shares of the stock or whatever. In this case, I buy 100 shares of GDX. I buy a put option, and then I sell cover calls to pay for it. Okay, so anyways, so this money that I made, $38, gets subtracted off of that $442.72 I spent. So $442 minus 38 would be what? 442 minus 40 would be 402. So $404. So I got my cost down to $404. Okay, and then I did something else, and it's not showing up here. I actually have to go to the order status, and here's what I did today. The order got filled. I sold another covered call for the $25 strike price, took in another $86. This one is for January, and I believe that one might show up on my transactions here. Yeah, here it is, $78.28. So we'll see what happens in the next few months, whatever GDX decides to do. Now, the reason why I did all this is because of the chart here. Okay, if you look at GDX, here's my 100 shares of GDX, and you pull up the chart. Okay, so let's go to the chart. I use a lot of charts and technical analysis to judge what stocks are going to do. And GDX has a range. Okay, this is the 5-year chart. And let me pull up my trend lines. And you can see it's got a very flat chart. And so it's unknown, like this would be the low, the support level, and up here would be the resistance, and right here where I drew this first line would be the midpoint. And so you can kind of see this 5-year chart. And so in the last 5 years, they haven't been any higher than $30 or any lower than about $15. And so I wasn't sure whether GDX was going to go up or down or whatever. But it looks like to me that they're going to stay flat. So let's look at the 6-month chart so you can see a shorter range here. So here's the shorter range. It's a 6-month chart, and they dropped here. And I want to go back to my account and show you what I did here. Let's bring up the transactions here. And here we go on GDX. So initially here, I bought back this was 6 days ago, but notice that I did not immediately sell another covered call on July the 7th. I just now sold the next one. Okay, and the reason why I waited is because I thought gold was gonna make a run and go up a little bit, so I wanted to try to get more premium. There were some things going on. The Federal Reserve made an announcement that they might not raise rates that many more times, something to do with neutral. The economy is back to neutral, whatever the heck that means. And also I thought that this new drama with Donald Trump and the whole, his son emailed Russia and all that stuff, I thought that might have created some controversy. And so I thought gold might have made a run up, but it didn't. And it's kind of been bouncing around here. I want to pull up the 10-day chart so you can see that GDX really isn't doing hardly anything, which is what it's been doing the last like 5 years, I guess, right? So let's look at the 10-day chart here, and you see that it's just been kind of floundering. And so I thought, okay, fine. So maybe that means it's going to trade in its normal range, right? Here's their longer chart again, and I thought, okay, I feel comfortable selling a call option at the $25. Let me pull up the trend lines at this level right there. So right there, this is where my strike price is, the $25 call. And when you buy a stock or whatever, and then you sell a call option on the same stock, then what could happen is that stock might go up past $25. And if that happens, let's say GDX went to $26. The option buyer could, if he wanted to, use his options and use his call option to buy that 100 shares from me at $25 a share. And there's nothing wrong with that per se. I would still make money, but I want to stay in GDX. But I'm not really too concerned about that because, again, GDX is kind of floundering. It's not doing much of hardly anything. And so I thought, okay, I don't think I'll have to worry about GDX going too much higher than $25 by next January. That's when my call option is sold for. So again, I do the option caller strategy. That's where you buy 100 shares of stock, or in this case, an ETF, GDX, and then you buy a put option on that same stock or ETF. The put option gives you protection. And in my case, the put option that I bought is, where is it at? Right, where are you? Here it is, right here. I have a put option for the $23 level. Okay, what that means is that if gold tanks and GDX goes all the way down to $10 or $15, then I can use my put option and sell my 100 shares at $23 a share. So it's tremendous protection. I love it. It's just like, I always use the analogy of buying insurance. It's like buying life insurance or homeowners insurance in case there's an earthquake and your house turns into a pile of rubbish. Then your homeowner's insurance, you can buy a new house, and that's kind of what it's like when you buy put options, right? But put options cost money, and that's why you sell call options. So when you do option caller strategies, you are both the option buyer and the option seller. You buy the put options and you sell the call options, and the money that you receive, the premium, pays for the put options. So that's my bread and butter investment strategy that I do on GDX, and that's what I've done so far in the past few days. And so right now, I guess one more thing I need to say is that when you do option caller strategies, you want to actively manage your position. It's not something where you just buy and hold and forget about it. I'd say that's what most people do. Most people, they take automatic deductions out of their paycheck, put it in their 401k, and they never think about their money again. And let me ask you a question. What is the average return? Do most people make money or lose money in the stock market? I don't think it's a mystery or a secret. Most people do not do that well. Most people have somewhat negative attitude about the stock market, and there's a reason for that. It's because they just throw their money away like a blind man throwing darts at a dartboard, and they hope the market goes up, right? But if you're an active investor, I'm an active investor, then you learn things like this, and you learn how to hedge yourself and protect yourself. And your money, although you won't double or triple your money overnight, it will grow slowly over time. And if you watch my last few videos over the last few weeks, you see that I'm up several $100s, okay? I have oops, let me get rid of this thing. I'm up several $100s, right? So I'm not exactly, you know, doubling my money or tripling my money, but I'm making money, and over time I will slowly gain more and more money, and at some point I hope to have a few $100,000, and then I will set up for myself a nice income strategy, invest in a nice dividend paying stock, and I can live off that interest for the rest of my life. And I know how to set up income strategies if I had that much money. I would use a covered call strategy. I would look for a nice income stock like this one, Blackstone GDX. I really like this stock. Blackstone. This is one that if I had a lot of money, I for darn sure would be investing in this one. This one, their chart is, it's a relatively new stock, but it's a pretty stable stock. If you look at their market cap, they're $22 billion, so that is plenty enough large cap that I don't have to worry about a lot of volatility or instability. And their earnings per share, they're making money, and that's good. Their chart is reasonably strong. It's not perfect chart, but it's reasonably okay. Let's go to the long-term chart. Bring up my trend lines, and so you see that they're not that old. The stock's only been around for not even hardly 10 years, and when they first came out, they went down, and then they went up, and so, you know, they're trading right in about this area, and so they're somewhat up and down and bouncy, but check this out. Check this out right here. Okay, this is their dividend, $239 per share. That's a 7.1% return. So here's what I would do. I would buy this stock. I have $100,000 or whatever. I would buy as many shares as I could, and then I would start looking at these call options, and I would play it safe. I would look at the in the money calls, and then I would look at what I can get for that. So right now, as of right now, market is still open. Blackstone is trading at $34 and a penny. And so let's say I look at these call options, and I'd want to look at the ones that that have a little volume. This one has some volume, so I might look at this one right here. I might maybe sell this covered call option, and I would get about, looks like I get about $600 in premium. So $28 strike price plus a $600 brings me up to $34. That is a break-even strategy, so I wouldn't make money on the strategy. All the money I would make would be on my dividend, and the only way that I could lose money is if Blackstone would have to drop all the way down to $28 minus that premium. Okay, and that premium is $600, so that would be $22 it would have to go down to, plus the extra 10% in dividends that I would be making, and so that would be another 10% of $34 would be $3.40, so it would have to drop all the way to $19 for me to lose money. So basically what I'm saying is that if I were to sell this call option, which is good for 190 days, then I could collect half of that. I would make an easy 5% return in 6 months, and that would be a perfect strategy if I had a lot of money. Income strategies primarily are for when you have a lot of money, but as you can see, I don't have $100,000. I have $13,825, so I'm more about growth right now, and that's why I do the option collar strategy. Option collar strategy, my money can grow safely, and I can go to bed every night knowing that I'm not going to lose my money, and slowly but surely my money will grow over time, more than if I were to buy Blackstone and collect that dividend strategy. So anyways, that's what I've done so far. That's my position on GDX. I invest in gold because it's my hedge in case something goes screwball with the economy, and it's a good thing to do. And then the rest of my money I have in Bank of America. So thank you for watching this video. If you have any questions, leave it in the comment sections, and I will see you in the next video. Have a good day.